Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Selig, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. So if you've dared to look at your crypto portfolio recently, you probably know the general feeling out there.
Yeah, it's definitely heavy, especially since, the end of October. A lot of stress, big liquidations.
Exactly. Geopolitical stuff stirring the pot too. So our mission today really is to cut through that emotional reaction, the sea of red.
Right. We need to synthesize the information you've given us, figure out what actually pushed prices down.
And look at what macro forces are shaping November. Plus, maybe more importantly, look at the big structural changes coming down the pike. Regulation, tech, stuff you really need to keep an eye on.
Okay, so we've got a plan. First, we'll hit the immediate market stuff, the mechanics, the macro triggers, U.S. government chaos, tariffs, the FOMC meeting.
The usual suspects.
Pretty much. Then we pivot. Look longer term. Key tech shifts, that big Ethereum FACA upgrade is critical. And what's happening in D.C. with regulation, specifically that CFTC nomination.
Got it. And then we'll wrap up by shifting focus completely, right? Away from the global uncertainty, maybe.
Yeah, it's some really positive, high-impact news. Huge regional adoption happening in the UAE. It's actually a great counterpoint to the gloom.
Okay, sounds like a solid plan. Let's start with the here and now. The last, 72 hours? The numbers aren't exactly painting a rosy picture.
No, definitely not. Global market cap is sort of hovering just under that $3.7 trillion mark. I think it's $3.68 trillion as we record this.
And the majors have really felt that. Bitcoin, where's it sitting today?
Let's see, $107,324. But that's down almost 3% in 24 hours and crucially over 7.5% over the last week.
Ouch. And Ethereum often takes a harder hit in these conditions.
It has, down nearly 5% today and over 12.5% this past week, trading around $3,720.
Wow, okay. So the sentiment reflects that pain, I assume.
Absolutely. The market sentiment index, squarely in fear, score of 36, no surprises there.
But here's where it gets interesting, maybe a bit technical.
Yeah.
The ETF data. Money isn't just trickling out, is it?
No, it's gushing. We saw combined ETF outflows recently hitting almost $290 million.
$290 million. That's substantial. Mostly Bitcoin.
Yeah, Bitcoin ETFs took the biggest hit. Nearly $192 million flowed out. But Ethereum funds weren't spared either. Almost $100 million gone from those.
Okay, so big outflows. But you mentioned something interesting before we started about the trading volume.
Right. This is the paradox. Total market trading volume is actually up nearly 4%. Call it 3.7%.
Which normally you'd maybe think, okay, higher volume, maybe more interest, but prices are falling sharply.
Exactly. So when prices are tanking and volume is spiking, what does that tell you?
It screams sell pressure. Big players getting out.
Confirms it. Massive, relentless selling. Not just a small correction. You've got sophisticated players, likely institutions, hitting the sell button hard, probably hoping to buy back lower. That volume spike is just pure confirmation of the fear.
And the source of that fear, looking back at October, I mean, $80 billion in liquidations reported. Where did that start?
It's pretty much all macro-driven. The sources point squarely at the U.S. government shutdown kicking things off.
Why the shutdown specifically, beyond just general uncertainty?
Because it instantly paralyzed Washington. And that meant delaying the SEC's decision on several pending crypto ETFs.
Ah, okay. The ETF delays spooked the market.
Reportedly knocked Bitcoin down about 5% right off the bat. Traders got nervous, looked for somewhere safer, quote-unquote. Gold apparently saw inflows. And that shutdown volatility, it's not over. It's still hanging over the market now in November.
Right. And then there was that whole drama with the China tariffs.
Oh, yeah, the tariff roller coaster. Remember President Trump's initial threat? 100% tariffs on a bunch of goods?
Caused immediate panic, something like $19 billion in liquidations.
That's the figure cited. Just sheer shock. Now, towards the end of October, they did renegotiate, slashed those tariffs by over 47%, which, by the way, reportedly cut recession odds by 40%.
So it was some good news eventually, but the market didn't fully recover.
Not yet. The market remembers the shock. That initial panic soaked up all the liquidity, basically. The good news later wasn't enough to undo the damage immediately. Still a ways to go to rebuild that confidence.
Okay, shutdown, tariffs, and then the central banks weighed in. We got inflation data.
Yep. The October CPI numbers came in a bit softer than expected. Core inflation year over year was 2.4%. Overall was 3%.
And then the Fed, the FOMC, met right after that, end of October.
October 29th. And they delivered the rate cut everyone expected, 25 basis points.
So, lower inflation, a rate cut. Logically, that should help risk assets like crypto, right? Cheaper money.
You would think so. But the market, it tanked right after. And this is where the narrative becomes so much more powerful than the actual event.
What happened?
The cut itself was totally priced in. Everyone knew it was coming. What wasn't priced in was this widely reported hawkish tilt from Jerome Powell during the press conference.
Hawkish, even while cutting rates. How does that work?
It wasn't about the cut itself. It was the signaling for the future. The market interpreted his language, the lack of strong promises about more cuts, as meaning, okay, maybe that's it for easing for a while.
So the fear wasn't the present, but the future possibility of rates staying higher for longer.
Bingo. Traders instantly started pricing that in, and that forced a really fast, really dramatic repricing of risk assets. Crypto got hammered. So a technically positive event, the rate cut got flipped into a macro negative purely by the narrative around future policy.
Man, navigating this market is as much about psychology as it is about the numbers sometimes.
Small ways.
So looking ahead into November, if this selling pressure is going to ease off, if we're going to see any kind of sustainable pump, what are the key signs? What should you be watching?
Two metrics are absolutely critical right now. First, stablecoin volume.
Okay, why stablecoins?
Think of it as the dry powder waiting on the sidelines. Right now, Tether USDT volume is really low, only around $13 billion. For the market to really support a strong, sustained move upwards, we need to see huge amounts of that capital move back onto exchanges, ready to buy.
What kind of volume are we talking ideally?
Ideally, you'd want to see that stablecoin volume climb way up, maybe into the $170 billion to $200 billion range. That signals real buying power is ready to deploy. Right now, the cash reserves just aren't there.
Makes sense. And the second metric?
ETF inflows. We just talked about those massive outflows. That trend needs to reverse, sharpish. We need to see consistent, steady money flowing into Bitcoin and Ethereum ETFs.
That's the institutional confidence signal.
Exactly. That's the key. Consistent ETF inflows are probably what's needed for Bitcoin to even think about breaking that big psychological and technical level around $115,000.
Okay, clear signals to watch.
Right.
Stablecoin volume up, ETF flows turning positive.
Those are your main gauges for now.
Right. That actually sets us up perfectly to talk about the structural changes. Let's shift away from the immediate market dread and look at the slower, steadier regulatory picture. There's this interesting power struggle happening in the U.S., isn't there, between the CFTC and the SEC.
Yeah, and this is really crucial for long-term institutional confidence. There's a very strong view within the crypto industry, and increasingly beyond it, that the Commodity Futures Trading Commission, the CFTC, is the right place for most crypto regulation.
Because most assets function more like commodities than securities.
That's the argument. It directly clashes with the SEC's approach under Gary Gensler, who's been, let's say, widely seen as overstepping by trying to classify almost everything as a security under his purview.
Which leads to this potentially really significant nomination.
Exactly. President Trump has nominated Michael Selig to be the next CFTC chair. And this is potentially huge news for the industry.
Why Selig specifically?
Well, he's known to be very pro-crypto. He's a lawyer with deep experience, including being the former chief counsel for the SEC's own crypto task force. And his core argument is that assets like, say, XRP are fundamentally commodities, not securities.
So his appointment would really shift the balance of power towards the CFTC view.
Massively. His confirmation would likely accelerate getting clear rules of the road, which institutions desperately want. It would definitively move oversight away from the SEC's current, very aggressive stance.
Okay, so that sounds like unambiguously good news for crypto regulation in the U.S. But there's a catch.
There's a huge irony here. This really important appointment, the one thing that could seriously boost market confidence by providing regulatory clarity, it's stuck.
Stuck where?
In the Senate confirmation process. And why is it stuck? Because of the U.S. government shutdown.
Wow. So the same political paralysis that's dragging the market down
is also preventing the confirmation of the one person who might actually be able to provide the regulatory certainty the market needs to recover. It's a classic Washington-owned goal.
You couldn't make it up sometimes. Okay, let's part the regulatory gridlock for a moment and talk tech. The foundations. Ethereum's got a big upgrade coming. FICA.
Yes, FACA, scheduled for December 3rd. And this is a really fundamental upgrade for the network.
What's the main goal here? What problem is it trying to solve?
It's all about tackling Ethereum's biggest headaches, scalability and cost. The explicit aim of FACA is to boost the network's capacity, let it handle way more traffic, and slash transaction costs. But the focus is almost entirely on the Layer 2 networks.
Layer 2s, so things like Arbitrum, Optimism, Base.
Exactly. Those protocols built on top of Ethereum. That's where the primary benefit of FACA will be felt.
Okay, so how does it actually do that? What's under the hood?
Two main technical innovations. First, something called Pure DES.
Pure DES. Sounds fancy.
It stands for, well, the technicals aren't super important, but think of it like this. Instead of one person checking a huge pile of homework, Pure DES splits the data verification work across thousands of nodes on the network.
So distributing the load makes it way more efficient.
Exponentially more efficient and more secure, too, because the verification happens in parallel. It's a new way of sampling and verifying data availability.
Okay, that makes sense. And the second piece?
It extends what's called the blob system.
Blobs, okay.
Yeah, blobs are basically just dedicated chunks of space within an Ethereum block designed to hold transaction data from Layer 2s relatively cheaply. FACA significantly increases the capacity and efficiency of these blobs.
Meaning Layer 2s can post more data to the main chain more cheaply.
Precisely. More data per block without clogging up the main network. Oh, and the symbol for the upgrade is a zebra, apparently representing the striped pattern of how Pure DES distributes data.
Zebra. Okay, got it. Pure DES and bigger blobs for Layer 2 data. So the key point for, the average listener holding some ETH, how do they actually feel this upgrade?
Right, this is crucial. You probably won't see your gas fees on the main Ethereum network drop dramatically overnight just because of FACA.
Ah, okay, so it's not a direct mainnet fee reduction?
Not directly, no. The benefits are felt indirectly, but powerfully if you use layer 2s, because FACA makes it much, much cheaper and faster for Arbitrum, Optimism Base, and others to settle their big batches of transactions back onto the main Ethereum blockchain.
Those savings get passed on to the users of those L2s.
Exactly. You should see significantly lower fees and quicker transactions on those layer 2 platforms. If you're a regular user of those rollups, you'll likely feel the impact pretty quickly after December 3rd.
That's a really important clarification. It's an infrastructure upgrade, primarily benefiting the L2 ecosystem built on top.
That's the core of it. Better foundations for the whole ecosystem.
Okay. Before we jump to the bigger geopolitical picture, there was one little micro trend you flagged. Something about privacy coins.
Yeah, just in the last day or two, actually, we've seen a noticeable little pump in privacy coin prices. Nothing huge, but noticeable.
Which ones?
Zcash is currently leading by market cap, around $6.3 billion, with Monero close behind at about $6.17 billion.
Any theories why? Is it linked to this regulation talk, maybe?
It's likely a hedge bet by some traders, as this global conversation heats up about potentially very centralized, trackable digital currencies, which we're about to discuss. Some people might be thinking that true censorship-resistant privacy will become a really valuable commodity down the line.
A counter-reaction to perceived incoming control. Makes sense.
Could be. Just something interesting happening on the fringes.
Okay, well, that tees up the next topic perfectly. Let's look at that global stage, specifically Europe, and the move towards central control with CBDCs.
Right, and if you contrast the sort of decentralized, open-source nature of something like Ethereum that we just discussed with central bank digital currencies or CBDCs, the philosophical gap is just immense.
And Europe is moving forward quite aggressively with its own version, the digital euro.
They are. The European Central Bank, under Christine Lagarde, just announced the digital euro project is moving into its final preparation phase.
Preparation phase. What does that mean in terms of timeline?
They're aiming for a potential continent-wide rollout by 2029. But before that, they need regulations finalized, probably around 2026, and then a pilot program starting mid-2027. So it's still years away, but the direction of travel is clear.
Okay, but the really crucial detail, the one that makes crypto folks nervous, is about the underlying technology, right?
Exactly. The ECB was very explicit. They stated the project will not use any public blockchain.
No public blockchain. So
Yeah.
fully centralized.
Completely. This is the ultimate red flag for anyone who values decentralization. A centralized CBDC run by the government or central bank means they have total oversight, full control over every transaction.
And the technical ability to, block accounts? Freeze funds?
Instantly. They could potentially enforce spending limits, dictate where money can be spent. It's the opposite of the permissionless, trustless ethos of Bitcoin and other public cryptocurrencies. A very different vision for the future of money.
Definitely a stark contrast.
Ugh.
Okay, let's pivot now, leave the potential dystopia behind, and look at some genuinely positive adoption news. We're heading to the UAE.
Yes, the United Arab Emirates, which is really doubling down on becoming a major global hub for crypto and blockchain innovation. And this starts, interestingly, with a high-level geopolitical partnership.
Okay, tell me about that.
So during a big energy conference, ADPEC 2025, held in Abu Dhabi, the UAE president met with Doug Burgum. He's the chairman of the U.S. National Energy Dominance Council.
U.S. and UAE talking energy makes sense. What came out of it?
They signed a pretty significant memorandum of understanding, an MOU, to boost collaboration specifically in energy and artificial intelligence.
Energy and AI, how does that connect to crypto?
The key focus within that MOU is on things like smart energy systems, high-tech manufacturing, and efficient supply chains. What does AI and advanced manufacturing require? Huge amounts of
Processing power, high-performance computing.
Exactly. Reliable, localized, high-performance computing power, which just happens to be the exact same infrastructure needed for large-scale, potentially state-backed crypto mining operations, particularly cloud mining.
Ah, okay. So this high-level energy and AI deal kind of lays the essential groundwork, the infrastructure, and maybe the political blessing for large-scale compute initiative.
Precisely. It creates the perfect environment for what came next, which is the really big news, the deal breaker.
Which is?
A major established telecom player jumping into crypto mining.
A telecom. Wow. Okay, who?
DU, one of the UAE's telecom giants. They launched a new service under their DuTech brand called Cloud Miner.
Cloud miner. And this is significant because
It's the first telecom-backed Bitcoin cloud mining service in the entire UAE. This isn't some small startup finding a niche. This is a massive, state-linked infrastructure provider getting directly involved in providing Bitcoin mining services to the public.
that feels like state-level adoption, essentially.
It's pretty close. It signals huge confidence and integration.
Okay, what are the specifics? How does it work for users?
People can basically rent mining power, hash rate, directly from DU. They offer plans up to 250 terahashes per second, which is quite a bit, through a 24-month subscription model.
And critically, how are they handling things like compliance, KYC? That's often a hurdle.
They've integrated it fully. The service is compliant with all the standard Know Your Customer, KYC, and anti-money laundering, AML regulations. And they're using the official UAE Pass digital identity system for verification.
So leveraging existing national digital ID infrastructure to make onboarding smooth and compliant.
Exactly. By tying it into the established telecom network and the national ID system, they're making it incredibly easy and legitimate for locals to get involved. It's a massive boost for local adoption and really sets the template for how crypto can be integrated safely.
Any fanfare around the launch?
Oh, yeah. They apparently marked it with a huge, iconic advertisement splashed across the Burj Khalifa in Dubai, really positioning it as a major national tech initiative.
Wow. Burj Khalifa ad. That's making a statement.
Definitely sends a message about their ambitions.
Okay, so quite a journey today. From market fear and macro woes to major tech upgrades and genuine state-level adoption in the UAE. How do we tie this all together?
Well, if we synthesize the dynamics, right, the market right now is clearly suffering. It's a technical and geopolitical hangover. The U.S. shutdown shadow is long, ETF outflows are painful, macro fear is dominant in the price action.
But underneath that surface noise.
Underneath, the structural foundations are arguably getting much stronger, much more bullish. You've got that major push for regulatory clarity in the U.S., even if it's temporarily stalled. You have core technology like Ethereum getting fundamentally more efficient with the FACA upgrade.
And then the undeniable adoption signal from the UAE.
And undeniable high-impact, state-influenced adoption accelerating rapidly in places like the UAE. So short-term pain, maybe, but the long-term infrastructure build-out continues pretty aggressively.
Okay, so maybe a final thought for you, our listener, to chew on as you process all this. We've seen this clear, control-oriented push towards a centralized digital euro. At the same time, U.S. regulatory progress, which could bring clarity, is stuck in political mudslinging.
Yeah, the contrast is stark.
So the question is, what's going to be the faster catalyst for changing mass market behavior? Is it going to be the heavy-handed top-down imposition of government-controlled CBDCs? Or will it be the quieter, perhaps slower, but steady improvements in the efficiency and usability of decentralized Layer 2 solutions like the ones FACA enables? Control versus technology. Something to think about this November.